It was an awesome Memorial Day weekend.
Good, good. I'm glad. That means a lot of work, I'm hoping, right?
Yes.
Everybody was out there showing their clients and getting all the action going.
Yep. We'll be opening escrow on one of our listings today.
Oh, I love it. From showings from Memorial Day?
Yeah.
Oh, perfect.
Memorial weekend.
Ah, very nice. Very nice. So that's always the thing, right? You know, I was talking with somebody and they were sharing that it's so funny that in most industries, everybody is like, oh, it's a holiday. And in our industry, it's very much a working day, right? It's a great opportunity because a lot of people have a little bit more free time. And especially right now, you know, although a lot of people are home, that's kind of that date that they're not working. And so you get an opportunity to really just go out and show them homes. Well, good. I'm glad that you guys had an absolutely great long weekend and that everybody enjoyed it. I saw, you know, different stories on social media, people out there showing property, getting with their clients, and then also, you know, enjoying time with family. And so I hope you all had an absolutely phenomenal weekend. And we get today started on a Tuesday. So I do want to go into our weekly market update because I know there's going to be a lot to share there. And then I'm going to share a little bit about what some of the updates that we've seen just in the forbearance market in preparation of our training on Thursday that, trust me when I say, you're not going to want to miss that training. But I want to go into the market update first. So we're gonna jump right into that. Let me go ahead and get my screen shared. 1 second. Okay, let's see. Okay, awesome. Everyone seeing the market update? Thumbs up. Okay, perfect. Perfect. So getting into today, we're going to be looking at a little bit of a different period. This is our 9-week period. But I do want to pop into just starting off with our real estate showings, right? Starting off with our real estate showings in terms of this year's peak and then the same time last year. Let's look at this area right here, right? So this is last Sunday. And we were up about 28 from that initial kind of peak area here. And yet we were still down a little, but we've definitely been closing up the gap. So it's consistently gone up for the most part, with the exception of a couple dips. And we've talked about those. Those happen generally on holiday weekends or when circumstances were changing based on some of the orders that were in place. And yet we've seen this continue to kind of push back up. This is actually a pretty interesting spike right here. So if you notice, when we look at all of this, this has kind of been a gradual uptick. And yet last week, from last Sunday to this past Sunday, we had a pretty hot spike there in terms of showings that happened pretty quickly, whereas it's leveled out a little bit here. And if we look at this week, we're pretty close to where we were. That's less than a 9% difference on where we were from a showing perspective last year at this same time. So we're really getting back to our pre-COVID levels of showings, which is great to see. I think there's a possibility that as, you know, we get buyers, I think we're going to hit this, if not surpass it very soon, and kind of stay pretty close in terms of the amount of showings that are going on. And the only reason that I say that is there's a little bit of pent-up need, right? As you have this major dip that happened, everybody's getting pretty comfortable on coming back out and seeing more properties. And so you're starting to see that pent-up need be released a little bit, right? Which is likely why we had a little bit more of this significant spike just after the holiday, right, within that past week. And then this has stayed at kind of pretty gradual, but we're getting really close to our showing numbers from last year. So I know there's a lot of action out there right now. We've got a lot of buyers that are taking advantage of the interest rates as they stand right now. Your buyers right now are pretty well packaged. What do I mean by that? A lot of the buyers that are out there right now that are active, that are looking, they're fairly strong buyers is what we're kind of seeing. And that's just due to the tightening up of the regulations, is they have to be. right? There's really not very many options right now if they are fairly stable in their work, if they don't have, good credit, if they're not kind of positioned with having enough reserves right now, then there's not as many options. And so we're seeing that market kind of get back to those pre-COVID numbers in terms of the showings. Now, this is going to play out really interestingly, considering that we still have limited inventory, right? So we've got a lot of showings happening, similar to where we were at this time last year, very close, in fact, and yet we still have very limited numbers of inventory. So that, in terms of the way this is going to play out from a pricing perspective, we may see this continue to keep, pricing pretty competitive, and we're going to look at those numbers as well. Right, so again, we're looking at an 8-week window that we've been viewing is that 127 to 322, and this is now in comparison to a 9-week window. So we're going to be looking at the 9-week averages versus the 8-week averages here. Now, when we were looking at this last week, and I'm gonna kind of be fluctuating between the two screens because I think there's some really important stuff to show you, right? And how this relates to where we are in terms of the showing numbers and how those continue to go up. So if you notice here, last week, the average price point of properties that were listed for sale was $575. That drove up the per week average over that 8-week period to 556, almost 557, right? In comparison to 554. That was the first week within this post-COVID time period that we've seen us go into the green from a trend analysis, right? It was the first time that we've gone into the green where the average price point in this post-COVID time frame is actually higher than it was pre-COVID, right? So we're gonna look at this, the average for sale price, right? And now we look at this 9-week average. So last week, the pricing stayed the same. The average price point last week was $575, right? Because that's been a little bit on the higher side, it did bring up our per week average slightly to about $559, but the price itself didn't actually go up, right? Pricing on the for sale inventory has stayed even. Where that hasn't been the case is here when we look at under contract. So last week, now let's look at this. The median price point of properties hitting the market is $575. And yet once they're going under contract, right, our median price point is $600, right? Our median price point was $600 last week, bringing us up to a $591, $269 per week average within the past 8 weeks. Still a little bit lower than what it was pre-COVID impact. And yet if we look at this week, the under contract median price point is $620. That's a $20,000 increase from last week to this week, right? A $20,000 increase from last week to this week. That's brought up our average to about $594, almost $595, right? That's pretty close to about $595. It's changed the percentage only slightly, right? But now we're only down about 1.46%. And yet if this continues, this is likely due to the showings continuing to increase. So I want to really kind of have that point stick, is showings have popped up pretty consistently, right? We're seeing a lot of buyers gaining that confidence to go out and look in the market. And yet when we get over here and we start looking at our inventory still being pretty low, right, we're getting almost to pre-COVID showing trends, and yet there's limited inventory. And so we're starting to see this in terms of driving up the price here, right? Driving up the price of our under contract. So more than likely, the reason the price is being driven up, even though the for sale price is about $575, I would say that properties being listed on the market right now, we don't want to overprice them because we're going to drive down the traffic there. And we're seeing that price point for those properties that are going on the market staying pretty stable, right? And yet where we're seeing a little bit more of the competition is once they're going under contract, right? That's where we're seeing this pricing bump up. So limited inventory paired with that pre-COVID kind of showing trends, right? Is we're getting to a point where there's still that buyer competition, on those really attractive properties that are in the market right now. I know a lot of you are still seeing multiple offer scenarios or are still competing in multiple offer scenarios if you're working with your buyers. And so you want to share this with them, right? Because those buyers that are looking right now, if they're really serious about taking advantage of the rates, if they're really serious about using this opportunity to get into a potential dream home for them, then we want to make sure that they're still competing a little bit and they're still understanding that, you know, even though there's a little bit less of that inventory on the market, that they're still going to be facing a competitive buyer landscape right now. And so they want to be, you want to coach them on that so that they're still putting in a competitive offer so that they can get into that home of their choice and take advantage of the rates as they are right now, right? And take advantage of the rates as they are right now. Now let's look at the inventory. So the average number of total inventory sold. So this is the number of closings on a week by week basis. Last week, it was 527. This past week, 555. So it's gone up slightly. It's actually brought up slightly our per week average, and yet we're still down, right, pretty significantly from that post kind of that pre-COVID time period where we were seeing about 897 homes on average selling per week. Right now we're about 527 homes on average selling per week within this 9-week period. That's down 41.24% still. Right, so still it went up a little bit from last week, but it's not too significant of a difference yet, right? It's not too significant of a difference yet, and that's probably due to, you know, our inventory. And then getting into the average new inventory. So if we look at last week, we had 1,058 homes hit the market, right, which brought our per week average up to about 848. This past week, we had 1,051 homes hit the market, new inventory in Los Angeles County. That brought, that's actually slightly less, right? It's slightly less. So it brought our per week average down a little bit, right? It brought the per week average down a little bit. So we saw a little bit of dip in the new inventory this past week. Now, that's going to be something that we just want to kind of keep an eye on, right? There's no way really to tell as of right now why we experienced that little bit of a dip. It's not so big per se, and it also wasn't, other than this Monday being a holiday, there is the possibility that impacted a little bit within the past week, that there was a holiday weekend. You know, it could be that we're kind of in that middle of the month period, and we might see a spike towards the end of the month of people trying to get their property on the market for that June 1st timeframe. We could be seeing a little bit of that, you know, but that's going to be a number that we just want to keep an eye on, because that average, that per week inventory, we've seen it going up slightly for the past couple weeks, and this past week it was a slight dip, right? Not super significant. That's a difference of literally about 7 properties, right? That's a difference of about 7 properties. And yet we still want to keep an eye on that and kind of see, you know, what comes of it, right? What comes out of it. But in reality, I would say right now, you know, when you're talking with your clients, and part of where you really want to make sure that you're utilizing some of these numbers and some of these trends is really looking at one, with the buyers that are interested in getting in the market, reminding them of what's going on from a price perspective so that they stay competitive, right? And so that you can still move them forward if they're still well motivated, right? Then we want to make sure that we're moving them forward. Now, if we're looking at it from a seller perspective, then I definitely want to let them know that right now is still a great time to sell, because we're not seeing prices drop dramatically, right? And I know that's something that our buyers are asking out there is, you know, is right now a good time to buy, or should I wait till the prices go down? And yet we know, you know, how interest rates definitely play into that, and that them waiting may not be the best decision because they're going to lose that purchasing power on the back end. And then on the seller side, it's, hey, you know, prices are staying pretty stable. In fact, we're seeing that for sale price be that second week in a row that we're kind of above that per week average that we had pre-COVID, right? Not necessarily a huge increase. So again, we're not wanting to overprice or wanting to price at the market. And yet we're seeing a little bit more of that competition still once it's actually going under contract. And so we want to talk to our sellers about that as well, because right now may be a really great opportunity for them to get a premium dollar on their property while we continue to watch the overarching impact to see if prices are going to go up or down in the long run. Now, and I would say in the short term right now, while we still have this limited inventory, while we're still seeing showings, be a little bit more similar to that pre-COVID marker, I'm not anticipating prices dropping significantly within the next few weeks, right? It's unlikely, just based on the trends and just looking at the demand right now, right? It's very unlikely that we see those significant price decreases. Now, that may change months from now, right? That may change months from now, but looking at the trends right now, we're seeing very light fluctuation when it comes to pricing. Right. And now we're going a little bit into the green. I would anticipate that over the next couple of weeks, if this kind of trend continues, that we're probably going to see even that under contract pricing, considering that we were at about 620, right? And the difference is 603 per week average. If this continues to stay pretty high, it's going to bring the 9-week average, that per week average up, right? So we may get into a point where even on our under contract, we're a little bit closer to that pre-COVID impact pricing, right? And I don't, definitely with the inventory as it is, I'm not anticipating that changing, right? I'm not anticipating that changing because it doesn't really make sense, right? To have a huge fluctuation in price. Now, if we had all of a sudden all kinds of inventory flooding the market, that might be a little bit different, right? And yet we're definitely not seeing that. So a couple of the areas that I would say are still going to be elements that you want to start building your pipeline around, right, is going to be, I'm going to stop sharing that for a bit. Okay, awesome. A couple of the places where you want to really build your pipeline around, right? We've talked about this, absentee owners. Now, what's coming up at the end of this week? Month end, right? Month end. So we've seen, especially with everything going on from a rent perspective, are there programs out there meant to, be of service to tenants that are unable to pay their rent? Are there programs that, the landlords, can they go into things like the forbearance and things like that? Technically, there are options, right? There are options. And yet that might not be the best option for them. Right? A forbearance may not be the best option for them. And so the goal here is that you act as the consultant. On Thursday, when we go into the mortgage forbearances a bit more, we're really going to be looking at how is there an opportunity based on what's happening right now in the market for you to build up a pipeline of future business. And that future business is highly likely that it's going to be primarily listing focused. Right? Primarily listing focus. And I'll share a little bit on that. When we look at what's been going on in the forbearance market, at the beginning of April, only 2.66% of all US mortgages were in forbearance, right? Less than 3%. That's increased dramatically. As of last week, when I shared stats on it, we were at about 8.16% of all US mortgages. As of 3 days ago, that number had increased to almost close to 9%, right? Almost close to 9%. Depending on how we see it, this continue to go up, we could be almost at 10% by the end of June, right? That's a hell of a lot of US mortgages, right? That's a hell of a lot of people that are in a mortgage forbearance situation. And so there's a huge opportunity within that market. And when we go into the training on Thursday, what we're really going to be guiding you through is starting off, are they already in a mortgage forbearance? And if they are, what are their options? Are they not in a mortgage forbearance? And what are their options, whether they have equity or they don't have equity, right? And we're going to take you through a full mind map that we'll be giving you on the conversations around that, right? The conversations, how do you talk to them? What are the different, how do you talk with them about the mortgage forbearance? How do you consult them? What are the different options that you can take them through? And what are the different conversation or decision points that they have throughout that? And then once you're guiding them, because at the end of the day, our goal is to help them protect their equity, right? We protect our clients' equity, or we help them build equity. That's what we do as real estate agents. That's one of the foundational pieces of our job, of how we help them. And so we want to help you guide through that conversation. We'll be giving you after that training. So we're going to take you through that conversation that you have with your clients from start to finish. We're going to be giving you an actual visual representation of that conversation in the form of like a mind map, so that you can actually utilize that with your clients as well, right? So that you can use it to coach and consult your clients, because the goal here is, what we realize to be true is that it's going to be very difficult for some of these people that are already in a mortgage forbearance situation to get out of it, right? And so we really need to know, what are their options on the other side of this, and how are you able to best support them? And so that's going to be a big piece that we're going to be going through it as well. I see a question on the Facebook. I definitely will make sure that I repost the slides. I'll re-record, and then I'll post a link where those will be at as well. And then what I'll do as well is, in the group and in the comments, I will post a link for the forbearance training as well. You do have to register for this one, and that's so that we make sure that we have your email, so that we can connect with you after about any of the slides or any of the things that we're going to be sending out for it. And it is registered only, just so that we can keep it safe. It's going to be in webinar format, and it will be delivered on Zoom as well. A couple things for just getting started on today, and just overarching, what we're working on right now. You guys do have Bold today, so if you're enrolled in Bold, right, we have Bold today. You want to make sure that you're on that. I'll be sending out the links as well. And then on the other side, we want to make sure as well, Tomorrow, we're going to be having our team meeting. So we'll have some of the vendors on to give updates. There's going to be some stuff that we're sharing from a technology perspective. So you want to make sure that you're on that as well, to hear some tech announcements that we're going to be making. And then we will have the forbearance training on Thursday, as well as an open tech forum on Thursday evening. So in addition to some of the stuff that we regularly do that you guys know are on the calendar, our contracts class today, and just some of the other pieces as well. Those are just a couple of the items to make sure that you have on your calendar. I think that those were all the questions for today. So I will make sure. I see Jennifer, you raised your hand.
Hey, Monica, good morning. Happy Tuesday.
Good morning.
Good morning. Good morning. I have a question for you on the calendar, that the message that we got this morning. It says at 1:30 there's an agent partner May team meeting. Is that a mistake? Is that for tomorrow?
Yes, that is for tomorrow.
Okay, because that showed up in our calendar for today.
Thank you. No. I'll make sure
No
that
problem.
that goes out. That's going to be for tomorrow.
Okay, sounds good. I was confused because, okay.
Thank
perfect.
you.
No
Yeah,
problem.
thank you. Sorry about that, you guys. The technology happens. Technology happens. That team meeting is for tomorrow, because we know that there is a title event today that many of you attend, and we wanted to make sure that you had that opportunity to attend it, because there's some really great information. I believe, if I'm not incorrect, they're having Dennis Block on today. So that's a great, content that you want to have, and I'll make sure that we have a correction go out on that as well. Thank you, guys. Awesome. Okay, so to wrap up for today, just a couple pieces. I liked these quotes this morning on purpose. When you walk with purpose, you collide with destiny. When you walk with purpose, you collide with destiny. Bertice Berry. Life isn't about finding yourself. Life is about creating yourself. So I ask you, what is it that you're creating today by the actions and the activities that you do? Right? What is it that you're creating today through your actions and activities? That's by George Bernard Shaw. Earl Nightingale says, you become what you think about. You become what you think about. I was listening to a podcast with Ben Kinney earlier this morning. And for those of you that follow Ben Kinney, He's got an absolutely phenomenal business. He's within the top 10 agents within Keller Williams. You know, he does, I think he's in the 2,200s in the number of transactions that his organization does on an annual basis. And one of the things that I love that he shared is he said, you know, we're like water. And when you put water in a bucket, well, does the bucket conform to the water or does the water conform to the bucket? Right? And he said, what does our environment look like? What type of information are we feeding ourselves every day? You know, what are we listening to? Do we conform to our environment, or does our environment conform to us? Right. And so that's one of the things he shared. And I loved that idea on the bucket. And so it's really important that we know what information we're feeding ourselves, right? How are we working towards growth? How are we creating ourselves? So Earl Nightingale, you become what you think about, which goes with the bold law. Your cells eavesdrop on your thoughts. Your cells eavesdrop on your thoughts, right? Mary Engelbert says, if you don't like something, change it. If you can't change it, change the way you think about it, right? If you don't like something, change it. If you can't change it, change the way you think about it. And Norman Vincent says, change your thoughts and you change your world. And Diana Kokoska in bold says, change the way you look at things and the things you look at change. Right? Change the way you look at things and the things you look at change. So I hope you all have an absolutely phenomenal morning. I will make sure that I share the stats with you as well. I'll make sure to post those in and go out and make it an absolutely bold day. Bye, everyone.